Would you like to invest like Warren Buffett? Want to know what a multi-billionaire investor is doing with his money? Looking for a market-smashing 4.6% yield in this low-rate environment? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, if you want exclusive access to my personal six-figure stock portfolio and alerts on any new investments I make, check out the Patreon link in the description below. I've said this many times before, but Warren Buffett is a personal hero of mine. His investing acumen is through the roof. He's arguably the greatest investor of all time. He's racked up a compound annual return of 20% going back decades. He built a $100 billion fortune purely through investing, and that fortune would be worth $200 billion today if he didn't already give away billions of dollars to charity. Within his conglomerate, Berkshire Hathaway, he controls a common stock portfolio that's worth over $300 billion. And Buffett and his team recently added to one of their holdings in that portfolio. Today, I want to tell you about the 4.6% yielding dividend growth stock that Berkshire Hathaway just bought. Let's dig in. The stock that Berkshire Hathaway just added to is Chevron Corporation, stock ticker CVX. Chevron Corporation is a multinational energy company with a market cap of $225 billion. Berkshire Hathaway scooped up more than 5.5 million shares in Q3. That 24.1% addition to their position brought the entire stake up to approximately 28.7 million shares, worth more than $3.3 billion. Let me point out one thing that's a little bit odd about this one. Berkshire Hathaway initiated their position in Chevron in Q4 2020. They then sold off about half of it only one quarter later in Q1 2021, and followed up on that with another small reduction in Q2 2021. Here we are now in Q3, and Berkshire Hathaway is doing an about face and buying up the stock again. It seems that Buffett is jumping back on the oil train. Choo-choo, all aboard. WTI crude is up about 60% this year. Chevron stock, which has some correlation to the price of oil, is up only 38% this year. Now, I'm not saying that Chevron will close that particular gap. It's not really the right comparison. What I am saying is Chevron has its fundamentals being supported by strong oil pricing. We can see that show up in the company's monster Q3 report. Chevron's third quarter was a thing of beauty. They beat the bottom line consensus expectation by $3.8 billion, with revenue coming in at 82.9% higher than a year ago. They also crushed the top line. Adjusted earnings per share increased by more than 15 times compared to Q3 2020. Yes, 15 times. Strong oil pricing is also supporting the company's dividend. This dividend aristocrat has increased its dividend for 34 consecutive years. They didn't cut the dividend during the pandemic, even when oil pricing went negative for the first time in history. That speaks volumes about the company's commitment to the dividend. The 10-year dividend growth rate is 7.7%. Chevron increased the dividend by 3.9% earlier this year. And you know what they say, the safest dividend is the one that just got raised. While these growth rates are good, the yield is where Chevron really shines. Chevron stock yields a market-smashing 4.6%. That's a juicy dividend right there. That's more than 3 times higher than what the S&P 500 yields. It's also 30 basis points higher than the stock's own 5-year average yield. So while Chevron rakes in the cash, investors are able to lock in a yield that's higher than usual. Buffett is known for his affinity for stocks that pay out big, growing dividends. So Chevron fits right in. Buffett may not call himself a dividend growth investor, but he sure invests like one. Many of the major long-term investments he's made over his legendary career have been high-quality dividend growth stocks like the ones I consistently feature here at the channel and personally invest in. It's very rare that Buffett buys a stock that doesn't pay a growing dividend. With Chevron stock still not quite back to its pre-pandemic pricing, it's not a surprise to see Berkshire Hathaway buying. The stock is up 38% this year, but it's still not yet back to where it was before the pandemic hit. That's right, this name was going for over $120 a share in early 2020, right before things got a little bit crazy. The stock is now priced at less than $117 a share. That's despite WTI crude being significantly higher right now than it was in early 2020. Buffett is famous for his ability to spot a deal. Well, Berkshire Hathaway might be spotting something right here. And I've got music for your ears. Chevron CEO Mike Wirth, who is, in my opinion, one of the best CEOs out there, especially in big oil, has gone on the record to state that Chevron is changing its focus away from exploration and production and toward returning cash to shareholders through dividends and buybacks. Politics, institutional investors, and the flow of capital have combined to force his hand, which could work out perfectly for shareholders. Less supply meeting growing demand supports higher oil prices, all while Chevron returns much of its cash flow right back to shareholders. Gone are the days of reckless spending on E&P. Instead, we get a cash cow that can be milked away. Now, Chevron's revenue and earnings per share are both down considerably compared to a decade ago. It's been a rough stretch for Chevron and all major oil players, no doubt about it. This is a smaller Chevron, but it's arguably also a more focused and disciplined Chevron than we've seen in the past, and that could bode very well for the business, the stock, and the dividend. I can't speak for Buffett or Berkshire Hathaway, but they might be seeing the same thing I'm looking at here. These comments by CEO Mike Wirth should catch your attention. He stated the following in the company's Q3 earnings report, and I quote, "Our free cash flow during the quarter was the best ever reported by the company. We paid dividends of $2.6 billion, reduced debt by $5.6 billion, and repurchased $625 million of shares during the quarter," unquote. I mean, how can you not love that? Meanwhile, the stock isn't unreasonably valued. Admittedly, it's a bit difficult to get a handle on the valuation. The company's earnings have been extremely volatile over the last year. Things are still normalizing, but it's difficult to ignore the favorable setup Chevron is now enjoying. The price to cash flow ratio of 10.2 is slightly lower than its 5-year average of 10.8, and the yield, as I noted earlier, is higher than its own 5-year average, with a leaner, meaner Chevron commanding a lower than average multiple and paying out a higher than average yield. That's compelling. Buying Chevron stock means you'd be invested alongside Warren Buffett. Of course, Buffett isn't the only one running the common stock portfolio for Berkshire Hathaway. He has 2 lieutenants helping him, Todd Combs and Ted Weschler. Regardless of who actually pulled the trigger on Chevron stock though, Buffett's got the exposure to Chevron all the same through his ownership in Berkshire Hathaway. If you haven't already taken a good look at Chevron stock, now might be a good time to do so. The Dividend Aristocrat offers an undemanding valuation, a market-smashing 4.6% yield, more than 30 consecutive years of dividend raises, and favorable industry dynamics. The company is a leaner, meaner version of itself, dedicated to being a cash cow for its shareholders. Make sure to consider this long-term opportunity if you haven't already. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about this stock. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also, take a look at the description box below for some important links, including a link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.